Okay, folks, welcome to our post-trade review of Amazon. With this trade of Amazon, we went short on February the 7th, 2018, and covered our short on February the 9th of 2018. So let's go over the charts that we're going to review for this video. We booked an 8.5% profit, or a $123.33 per share gain. We're going to go over the daily chart. Overlaid here, we have the S&P 500. We'll talk more about these overlays. The 2-hour chart and the VIX. Let's kick things off with the VIX because we have shorted Amazon.com twice successfully in the past month. Now, what gave us the inclination to look to get short of a stock that was outperforming the S&P 500? Well, a couple of reasons. I'll get to the technicals of Amazon to be more stock specific. But in terms of the S&P 500, we knew the S&P 500 was about to roll over for several reasons. One, the volatility index, which was coming off of historical lows, was diverging. Actually, I should say converging with the S&P 500. What does that mean? It means that the VIX was rallying with the S&P 500, which is not supposed to happen. So how do you interpret this? What does this mean to the average investor who is just looking at their screen and saying, what is this guy talking about? What does it mean to me? What it means is that when you have the VIX rallying with the S&P 500, it means that while investors are willing to buy the S&P 500, now they're hedging their bets. They're not quite as sure that the S&P 500 is going to continue higher as they once were. They want to stick with the trend. However, they're going to put a hedge on just in case. They were buying insurance. So we knew that there was doubt, an element of doubt in the minds of traders, and that was beginning to give us an edge over other traders because we observed this event. Note how you have the S&P 500 rising along with the VIX. It's not supposed to happen. And when you take a look at the S&P 500, you could see that at that time, we were just coming off of RSI on the S&P 500 of being over 90, an historic high. So the odds definitely favored shorts early in the month of February. Now, taking a look at Amazon, Amazon was holding up fairly well. Again, overlaid here in blue is the S&P 500 relative to the share price of Amazon. Amazon was holding up well. Now, we shorted Amazon for a profit, and we booked it here on the 5th. You can go to that video. It's posted on the blog or on YouTube or on Facebook or on StockTwits or Twitter. It's there. And what I told members is this, is that, listen, the market was sending us signals here on the 31st, here on the 1st, and then here post-earnings on the 2nd, that the shares of Amazon were beginning to be distributed stealthily, meaning that you had some stealth selling of institutions into a pool of liquidity. And we took advantage of that by shorting and booking profits here. On the 7th, we then again reopened a short position. Did we short at the highs of the day? No, that was not our goal. What our goal was to identify when we were putting in a new intra-period low. And we got that on the 7th. But we did want to respect the fact that the share price of Amazon was outperforming the S&P 500, but the S&P 500 was rolling over. And my assumption was that in all probability, since earnings had now been reported, and we had already seen some weakness on the earnings report, that in all probability we would begin to play catch up with the S&P 500, and that's exactly what happened. Let's go to the 2-hour chart. Okay, 2-hour chart, again, overlaid here is the S&P 500 in blue. We had book profits here. Remember that whenever you see a bottoming tail, normally implies that you have buyers below. Given the fact that the S&P 500 was getting a bit oversold, the probability that Amazon would outperform on the way up because it outperformed on the way down was quite high. And sure enough, you saw Amazon rip higher, far outpacing the S&P 500. So I said, you know what, members, let's let's look for a lower high on Amazon, and then let's look for a rollover and a breakdown on both the S&P 500 first, since it's been underperforming Amazon, and let's look for a rollover then on Amazon, and we'll short that weakness. And sure enough, you could see that we peaked out in the morning of the 7th. Amazon held in there steady for another couple of hours, and then it just rolled over, and we began shorting as we began to take out the lows of the day. And we opened up our short position here at 1423.33. We booked our profits down here at 1301. We did not get out at the lows of the day, and that really isn't our purpose, right? We saw the S&P 500 firming up. If the S&P 500 firmed up, Amazon was going to firm up. And when we recaptured this support level here at 1300, we stopped out and we locked in our profits, and that was a price of 1301 on the penny. So a really nice trade. Again, 8.5% or $122.33 per share. Now, we are currently stalking a new short position in Amazon now. So if you're not currently a member, you want to be a part of it, sign up for our 14-day free trial offer, which is going away very soon. Members, if you have any questions, leave a comment in the forum, and I will definitely get back to you. If you're watching this on YouTube, leave a comment below, subscribe to my channel, and if you're watching this on StockTwits or Twitter, leave a comment on those platforms, and I will certainly get back to you. Everybody have a profitable trading week, and I'll talk to you soon. Be well.